Hi, I'm Michael Glennon from Glennon Capital. So an interesting question this week: where can you find yield in a low interest rate environment? Interest rates dropped again this week. They're at historic low levels. So people are starting to look around. Term deposits no longer offering a great return. Currently, the bank cash rate or 6-month term deposit rate is around 2 to 2.25%. And the CPI rate, so the rate at which prices are growing in the economy, is about 1.2% per annum. So the real rate of growth that you're getting on your money in the bank is 0.8%. So it's incredibly low. You're actually almost going backwards at that rate after you take out fees and things like that. So you need to start looking in places where you can get a better return on your money. Historically, property in Australia has been very good. There's been long-term capital appreciation in property. However, property is starting to really get expensive. The yields on property, domestic residential property, is very low, between 1.3 and 4% in the capital cities. There's risk of prices coming backwards, especially as there's a massive oversupply of units that's going to hit the market in the next couple of years, as well as Chinese buyers seem to be pulling out of the market. So there's headlines frequently in the major newspapers that there are concerns about Chinese buyers pulling out of the market. So property, not the best place to be, certainly not one of my favourite places to invest. That brings us on to the equity market. You can get good returns, and historically have gotten great returns out of investing in the Australian banks, who've been very high yielding stocks. However, we've seen share prices of companies like Macquarie Bank and Commonwealth Bank pull back significantly over the last couple of years. The average yield on Australian banks is 6.3%. However, what's happened for the banks to maintain that yield is they've increased the payout ratio. So that's the amount of their profit that they're paying out in the form of dividends. So in 2017, the payout ratio for banks was about 65%. To maintain the yield that they're paying, so they keep the share price up, it's increased to 75% as at the end of last year. So the implication of that is that there's no longer enough profit left in the banks for them to continue growing. So they're paying out nearly everything they earn at 75%. The vast bulk being paid out to shareholders in the form of dividends, which doesn't leave them a lot of cash left to grow their businesses. In terms of the ASX industrials, they're very expensive, trading on 20 times 2017 earnings with a yield about 3.8%. So it's a little bit more than cash, but it's not fantastic. And resources, we've just come off the largest super cycle in the last 25 years, and those companies are yielding about 2.1%. So where do you go to find yield? Look, we're still very comfortable with small caps. There's a lot of good companies out there that are growing, but they're hard to find. You've really got to do your analysis and find businesses that they're growing their market share, they're growing their revenue, they're increasing their earnings per share, which means that not all of the money that they're earning is being diluted by capital raisings and things like that. And as that earnings per share increases, that gives them the ability to pay out more of their earnings in dividends while they're growing. So that's where we're trying to invest. There's a lot of companies out there. There's 2,000 companies in that small cap universe, but it's not difficult to find a portfolio of companies that you think will do well over the next few years. And certainly when you put it in the context of very low bank yields, 0.8% real interest rate. Bank shares where you may have capital losses because the shares have gone backwards, and there's risk that the banks won't be able to continue their high payout ratios, and property prices coming backwards because there's an oversupply of residential units coming onto the market. So we still think small caps are a very attractive place to invest where you can get good yield. You'll see many of the small cap listed investment companies have performed well over the last couple of months. They've got good payout ratios and high dividend yields. So that's where you can find good yield in this market. Low interest rate environment, you've really got to start being very selective about your investments and about the returns that you're getting off them. If you want to find out more about what we do or investing in our fund, please look at our website or follow us on YouTube. Thank you.